Okay, so you've got over 6,000 stocks listed on the market. Where do you even begin? I mean, it's a question that stops most people right in their tracks. Well, today, we're going to break down how one investor went from losing his shirt on bad stock tips to building a really powerful framework that helped him navigate all that chaos. So how'd he do it? Let's get into it. Check this out. 1.1 crore rupees. That's the net profit he pulled in from the stock market in a single year. It's a huge, staggering number, right? Makes you wonder how it's even possible. But behind that incredible result is a story of trial, error, and some very, very hard-learned lessons. So, was it easy? Of course not. Not even close. If it was, we'd all be doing it. You know, the path to that 1.1 crore figure was definitely not a straight line. In fact, it started with the kind of classic mistakes that so many new investors make. And this is really where his journey begins, not with some brilliant stock pick, but by doing what a lot of us do at first, blindly following tips from Telegram groups and Twitter. And as he puts it, he lost a lot of money there. It was actually that initial failure that was the wake-up call, forcing him to realize, okay, I need to build my own system. So what was the very first step in his big turnaround? You might be surprised. It had absolutely nothing to do with picking stocks. It was all about building the financial firepower you need to even be in the game.
Now this right here is such a critical mental shift. A beginner thinks, hey, I'm going to turn my 10,000 rupees into a lakh with these crazy returns. But the expert mindset is totally different. He understood that the fastest way to actually get rich, especially when you're starting out, isn't the market. It's your job. It's increasing your income and building up a solid base of capital to invest with.
And this just shows you the insane discipline he had. At one point, he was saving 50% of his income. 50%! By living at home with his parents and keeping his expenses super low, he was able to build up an initial investment pot of 30 lakh rupees. And that capital, that became the foundation for everything else. Okay, so once the capital was there, the next big challenge was navigating the emotional minefield of the market. This is what he calls the dark side. You know, that world of high-risk trading, of greed and fear that just trips up so many investors. And the numbers, well, they don't lie. A staggering 90% of traders lose money. They're often just following tips. They don't have a real strategy, no risk management. It's a brutal reality, and he had to learn that lesson firsthand. Let me tell you about his most expensive lesson. Picture this. It's a big election day and the market is just in a free fall. It's crashing. He's watching this happen and makes a classic mistake. He thinks, okay, it's gotta have hit the bottom. It can't possibly fall any more than this. So he decides to make a bet. But the market kept falling. And instead of cutting his losses and getting out, he did the exact opposite. He doubled down. Then he tripled down. He just kept buying more and more. In his own words, greed took over my logic. It was this critical moment where all strategy went out the window and pure emotion took control. And the result was brutal. A 6 lakh rupee loss in just 15 minutes. That was 5% of his entire capital just gone. Now, sure, the market did recover the next day, but it was too late. The damage was done. A truly painful but absolutely vital lesson. So the huge lesson he learned is this. Protecting your capital is everything. It's not about winning every single trade. It's about surviving your losses so you can stay in the game. Because the market will always give you another chance. You just have to be around to take it. So after surviving that dark side, he developed a really clear, systematic way to filter through those 6,000 plus stocks. He calls it the inevitable sectors framework, and it's all about identifying these massive, long-term trends that you can confidently bet on. So let's see how this actually works. First, you find sectors that you just know are going to grow, no matter what. Think about things like green energy or AI. Second, you find the 8 to 10 companies that are poised to win in that space. Third, you narrow that down to the 1 or 2 big players who are likely to really dominate. And finally, you dig in. You read their investor reports, you listen to their CEOs talk, you figure out if they actually have a clear vision for the future. But here's the thing, this framework isn't just about looking at companies in isolation. Its real power comes when you start connecting those small insights to massive global trends, everything from politics to technology. Now, this is a bit more of an advanced idea, but it's totally key to how he thinks. He's actively looking at how big global events like wars or trade disputes create these imbalances in supply and demand. And if you can understand those ripples, you can get a huge edge. Here's a perfect example of what I'm talking about. Say there's a conflict that affects Taiwan. Well, Taiwan is the world's #1 source for semiconductors. So what happens? Car companies can't get the chips they need. Production stops, sales plummet, and auto stocks all over the world could fall. It's about connecting those dots to see what's coming next. Okay, so I know this all sounds great in theory, but you might be thinking, how does someone without a finance degree even get started? Well, the really good news is that the tools you need to begin your own research, they're all out there and they're all free. And here are the exact resources he recommends. Screener.in gives you all the financial data. Every public company puts out investor presentations and conference call transcripts, and these are just gold mines of information. And then you've got forums like Value Picker, where you can see what other smart investors are talking about. I mean, you have to put in the reading time, but the information is all there for you. So here's the most crucial piece of advice if you're just starting. Don't try to understand everything at once. Just pick one industry that you're actually interested in. And then spend a year just diving deep, learning everything you can about it, the companies, the trends, the tech. Become an expert in that one single area. That focus is your biggest advantage. Which really leaves us with just one final thought. From AI and data centers to green energy and electric vehicles, the future is literally being built right now. So using this kind of framework, which inevitable sector will you choose to become the king of? The whole journey starts with that one simple choice.